Points, the NASDAQ coming off its worst day since 2022, bouncing back somewhat, up just about 0.5%, but that certainly isn't easing the concerns about the stock market.
$10 trillion. That's how much U.S. stocks lost in yesterday's trade. It was their worst drop since September.
The U.S. stock market has lost over $4 trillion in value following President Donald Trump's...
Canada's main stock index dropped today, while stock markets in the U.S. had their worst day in years.
The American stock market, which saw a sharp decline last week, continued its downward trend into the new week, marking its biggest loss in recent years. The $1.7 trillion market downturn raises critical questions. What are the implications of this decline, and can the U.S. economy rebound as President Trump predicts? In this video, we'll break down the latest market movements, key economic conflicts, and what they mean for the future. Make sure to subscribe, turn on notifications, and leave a like to stay updated with our content. Stocks tumbled over fears that the U.S. economy may be heading toward a recession. The Dow dropped nearly 900 points, the S&P 500 slid 2.7%, and the NASDAQ Composite plunged 4% as major tech stocks extended their losses. Tesla plummeted 15%, while other Magnificent Seven stocks, including Apple, Microsoft, Alphabet, Amazon, Nvidia, and Meta, fell between 2% and 5%.
To predict things like that, there is a period of transition because what we're doing is very big. We're bringing wealth back to America.
Over the weekend, President Trump refused to rule out the possibility of a U.S. recession, stating that a transition period is inevitable due to the scale of his administration's economic changes. In contrast, Commerce Secretary Howard Lutnick dismissed recession concerns, insisting the economy remains strong. However, some investors worry that the administration's stance could unsettle markets, especially as analysts debate whether Trump's aggressive trade policies will ultimately fuel growth or trigger further instability. This is the first time an administration has openly acknowledged that their policies could cause economic pain, said Shelby McFadden, an investment analyst at Motley Fool Asset Management. While job reports suggest a stable labor market for now, concerns are mounting over potential layoffs tied to deportations and government cutbacks. Penn Mutual Asset Management portfolio manager George Colon warned, "This administration is taking a vastly different approach, and there are numerous risks that could lead to a hard landing." Market turbulence persisted, with last week marking the S&P 500's worst performance in 6 months, falling 3.1%. At the start of the week, the 10-year U.S. Treasury yield dropped to 4.21% after closing above 4.31% last week. Meanwhile, the Wall Street Dollar Index hovered near its lowest level since November, posting its sharpest 2-year decline due to economic and foreign policy uncertainties. Overseas, Chinese stocks tumbled, and IMF data showed China's consumer prices fell more than expected. The Stoxx Europe 600 dropped 1.3%, though European defense stocks bucked the trend and continued their rally. As inflation indicators, consumer confidence data, and job reports loom, investors remain cautious. Key factors behind the market's recent decline include historically high stock valuations, economic uncertainty from shifting trade policies, and disappointing corporate earnings. Tesla alone lost over $125 billion in market value in a single day, while companies like Delta Airlines slashed profit forecasts, citing economic concerns. So, what's driving this market sell-off? A combination of trade policy uncertainty, recession fears, and overvalued stocks has shaken investor confidence. Tariff disputes with Canada, Mexico, and Europe have prompted corporate boards to reassess strategies. Which stocks took the hardest hit? Lazard CEO Peter Orszag asks. The answer? Tech stocks bore the brunt, with Tesla plunging by $125 billion, Apple and Nvidia shedding nearly 5%, and the S&P 500's tech sector declining by 4.3%. Delta Airlines also saw a steep 14% drop after slashing its first quarter profit forecast. Investor anxiety is rising as key economic reports approach. Trump acknowledged the risk, stating, "I hate making predictions, but we're in a transition because what we're doing is so big." Meanwhile, Baird investment strategist Ross Mayfield observed, This administration seems willing to let markets take a hit, possibly even accepting a recession to achieve their broader objectives. The White House remains optimistic, with National Economic Council Director Kevin Hassett insisting the economy is resilient despite market turbulence. There are plenty of reasons to be optimistic, Hassett said, adding that tariff uncertainty will soon be resolved and tax cuts will stimulate investment and wages. Still, investors remain skeptical, and market volatility reflects their concerns. What's next for investors? The focus now shifts to upcoming inflation reports, Federal Reserve interest rate decisions, and potential government measures to stabilize the economy. If investor confidence weakens further, markets could slide even more. Many experts have long warned about inflated stock valuations, waiting for a catalyst to trigger a correction. Investment analyst Dan Coatsworth of AJ Bell advises, in times of volatility, investors should stay informed and diversify to manage risk. Meanwhile, trade negotiations are set to begin early as the U.S., Canada, and Mexico revisit the United States-Mexico-Canada Agreement. Commerce Secretary Howard Lutnick and U.S. Trade Representative Jamieson Greer recently met with Canadian officials, including Finance Minister Dominic LeBlanc, U.S. Ambassador Kirsten Hillman, and Ontario Premier Doug Ford, to discuss potential revisions. Originally negotiated by Trump in his first term as a replacement for NAFTA, the agreement was signed into law in 2020. Now Trump is leveraging tariff threats to bring Canada and Mexico back to the table. While he publicly cites concerns over illegal substances and immigration, insiders suggest his primary objective is renegotiating trade terms to align with his economic agenda.